Hello everyone. Welcome to the Stock Minds web channel. Comfort Systems USA NYSE FIX has emerged as a standout performer in the industrial services sector, demonstrating robust growth and solid financials in its Q1 2025 earnings. With a strong backlog, impressive revenue and earnings growth, and favorable valuation metrics, Comfort Systems USA presents a compelling investment opportunity. In this video, we will dive into Comfort Systems USA recent earnings, stock performance, growth potential, and the risks investors should consider. About Comfort Systems USA. Founded in 1997 and headquartered in Houston, Texas, Comfort Systems USA is a leading provider of mechanical, electrical, and plumbing (MEP) contracting services. The company specializes in HVAC plumbing, piping, controls, off-site construction, monitoring, fire protection, and electrical system installation and servicing. Operating through 44 units across 172 locations in 131 U.S. cities, Comfort Systems serves diverse sectors including data centers, healthcare, industrial, and institutional facilities. As of 2024, the company employed approximately 18,300 individuals. Comfort Systems USA financial performance. In Q1 2025, Comfort Systems USA reported revenue of $1.83 billion, a 19.15% increase from $1.53 billion in Q1 2024. Earnings per share, EPS, surged to $4.75, up 76.58% from $2.69 in the same quarter last year. On a trailing 12-month TTM basis, revenue reached $7.32 billion, a 31.47% year-over-year increase from $5.57 billion, while EPS climbed to $16.66, up 64.78% from $10.11. The company maintained a gross profit margin of 21.61% and a net profit margin of 8.13%. Return on assets stood at 12.1%, with return on equity at an impressive 37.81%. The debt-to-equity ratio remained low at 0.17, indicating a strong balance sheet. In the past 5 years, Comfort Systems has been growing steadily, with revenue growing at a 24.8% CAGR, net income at a 38.3% CAGR, and free cash flow growing at a 16.7% CAGR. Comfort Systems USA 2025 financial forecast. Analysts forecast revenue of $7.79 billion for 2025, a 10.85% increase from 2024's $7.02 billion. EPS is projected to reach $19.56, a 33.98% rise from $14.60 in 2024. The average analyst price target is $523, suggesting a potential upside of 31.6% from current levels. Fixed stock performance and valuation. At the time this video created, Comfort Systems USA NYSE FIX is trading at $397.43 per share, reflecting a 27.6% increase over the past year, outperforming the S&P 500, which gained 9.3% during the same period. Meanwhile, over the past 5 years, FIX stock is up a staggering 1,179%, outperforming the S&P 500, which increased 94.6% over the same period. FIX stock also gives dividend yield of 0.38%. Key valuation metrics highlight the company's solid financial standing. The price-to-sales TTM ratio is 1.93, with a forward PS ratio of 1.8. The price-to-earnings TTM ratio stands at 23.86, and the forward PE ratio is 20.32. Additionally, the company's price-to-free cash flow TTM ratio is 27.63. If we look at the valuation over the past 5 years, the forward PS ratio is above its historical average of 1.08, but the forward PE is below the average of 19.34, based on FinChat data. There is a small difference in the forward figures due to different estimates on each site. The forecast estimate I used is from Seeking Alpha. These metrics suggest that FIX is reasonably valued. particularly when considering its impressive growth prospects and financial performance, supported by positive analyst sentiment. Comfort Systems growth potential. Comfort Systems USA is well positioned to capitalize on several growth drivers. 1. Robust backlog growth. The company's backlog reached a record $7 billion in Q1 2025, reflecting an $800 million sequential same-store increase and a 16.5% year-over-year growth. This backlog signals strong future demand across sectors like technology, pharmaceuticals, food, hospitals, and education. 2. Strategic acquisitions and market expansion. Comfort Systems has a proven track record of growth through acquisitions, integrating over 45 operating companies across 178 locations. Recent acquisitions, such as Century Contractors in January 2025, have exceeded expectations, contributing to revenue and operational synergies. The company maintains a healthy M&A pipeline, focusing on strategic fits that enhance its geographic and service capabilities. Expansion into modular construction and high-demand sectors like data centers, 37% of Q1 2025 revenue, up from 30% in 2024, positions the company to capitalize on megatrends like AI and technology infrastructure. Growth in non-tech sectors, including healthcare and education, further diversifies revenue streams. 3. Market and industry tailwinds. Persistent demand for HVAC, electrical, and plumbing services is driven by advanced technology infrastructure, e.g., data centers, energy efficiency mandates, and aging building systems. The company's expertise in modular construction, where 2025 capacity is already sold out, positions it to meet this demand. While the U.S. construction industry is forecast to grow at 7.1% annually over the next 2 years, Comfort Systems is expected to outpace this with 9.0% annual revenue growth, driven by its niche in high-margin, specialized contracting. Risks to consider. While Comfort Systems USA exhibits strong fundamentals, potential investors should be aware of certain risks. 1. Macroeconomic and policy risks. A potential U.S. economic slowdown could reduce demand for construction and retrofit projects, particularly in discretionary sectors like commercial real estate. Rising interest rates or inflation may also increase project costs or delay investments. Anticipated tariffs, especially under shifting U.S. trade policies, could raise costs for raw materials, e.g., steel, copper, used in HVAC, electrical, and plumbing systems. Regulatory changes affecting energy efficiency standards or construction permits could disrupt project timelines or profitability. 2. Operational and capacity constraints. The construction industry faces persistent skilled labor shortages. Despite Comfort Systems' success in recruitment, attracting and retaining technicians could limit project execution, especially with a record $7 billion backlog in Q1 2025. Large-scale projects, particularly in data centers and industrial sectors, carry risks of delays, cost overruns, or quality issues, which could harm margins and customer relationships. 3. Industry and competitive risks. The HVAC, electrical, and plumbing services market is fragmented, with competitors ranging from small local firms to large national players. Pricing pressure or loss of key contracts could erode margins. Heavy reliance on technology and data center clients, 37% of Q1 2025 revenue, exposes the company to sector-specific downturns, despite diversification into healthcare and education. Rapid advancements in building automation or energy-efficient systems require continuous investment in innovation. Failure to keep pace could weaken the company's competitive edge. Conclusion. Comfort Systems USA's Q1 2025 performance underscores its robust growth trajectory and solidifies its position as a leader in the MEP contracting industry. With strong financial metrics, a growing backlog, and strategic investments in technology and acquisitions, the company is well equipped to sustain its momentum. Given its reasonable valuation and positive outlook, FIX presents a compelling opportunity for investors seeking growth in the industrial services sector. But remember, this is not a financial advice. What do you think about Comfort Systems USA? Are you buying, Holding or passing? Drop your thoughts in the comments below. If you found this video helpful, make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.